Hello and welcome to our training today. We have an exciting program to share with you. I am David Miles. I'm with Academy of Trading and Investing. I'm one of the principals and coaches. And today I'm going to teach you how to earn income by trading weekly stock options. We get into the trade on Monday or Tuesday. We're always out by Friday. 98% of the time we don't have to do anything to that trade. We earn our income when the when the trade is generated, and you can make 500, 2,000 or more with this strategy. It's an excellent way to basically live off the stock market, earn your income from the stock market. Who are we? What is Academy of Trading and Investing? We want to enable our clients to become highly successful stock market investors. About 4% of all the option traders out there are able to generate good income for the long term. 96% eventually lose, they get frustrated, and they drop out. If 96 are losing money and 4% are making money, you can imagine what the profits are for the 4%. They're making the profits from the losses of the 96%. So if you have an excellent strategy that works and has been proven in real time for many years, you are in the driver's seat. We have 3 coaches in our company. We have over 100 years of stock market investing and coaching experience. And what makes us unique is each one of the coaches has 12 plus years of experience as a certified coach for Robert Kiyosaki's stock market investing course. It was an excellent course. We've taught that for a long time, and then we've started our own company. And here we are with Academy in Trading and Investing. Here's our 3 coaches. Paul Gibson, I'm David Miles in the middle, and Brian Burke. I strictly am technical. Paul Gibson and Brian, they do both fundamental and technical investing, whatever your forte is. Paul's written an excellent book on how to invest in the stock market, very comprehensive, which is available on our website. And here is the address, is academyofti.org. And here's my email address, david.miles@academyofti.org. A little bit about me. As you know, I'm a principal of Trading and Investing, LLC, Academy of Trading and Investing. I've been a stock market investor since 1985. Like many of you, I decided I was going to be a stock market trader. Then I quickly graduated to options. I would study the market, make a strategy, read, study, paper trade, then I go to real money. I'd have limited success, and then I'd usually turn around and give all the money back and end up with a loss. Very frustrating. If I would have had a coach in those days, I would have saved myself a lot of money. Coaching can be expensive. Our particular course is not, but it's a lot more expensive to try to learn by trial and error. Several years ago, I'd say about 8, I started trading this strategy, and I've been successful. I've never had a losing year since, and the returns have been excellent. And I want to teach you how to earn weekly paychecks by trading weekly stock options. Just as simple as that. Trading stock options carries a high level of risk. The high degree of leverage that options offer can work for you as well as against you, and I strongly recommend you receive mentoring or coaching from a veteran trader. If you want to become the 4%, which will change your life, you need a veteran trader. This is true. Stock options carry a high degree of risk. Your strategy, based on your own particular knowledge, will reduce that risk. But it's got to be a viable, well thought out strategy, which I can teach you. We'll talk about that today. Don't let this happen. Any strategy you have, you need to be able to make money when the market goes up and when the market goes down. My indicators, technical indicators, are very sensitive to market changes, and we trade the upside for the short time, and we trade the downside for the short time. We don't hang in there until the market comes back. Drops like we had in 2008 and this year, 2020, they can wipe out a big chunk of your 401k or IRA, and it's scary. Market has come back both times, and so the buy and hold is a strategy that works, but boy, it can make you nervous in the short term. I like to get in and out, make money. You can make more if you have a good strategy. You can make a lot more money with short-term trading in stock options than you can with buy and hold. I think Warren Buffett averages about 28% a year. Great return. I'm looking for 100% a year. Here's my broker statements, and the results I'm going to share with you today have been excellent. If somebody came and told me, hey, this is what I've done in the market, this is the money I've made, I would want to see stock options. So I wanted to show you what my strategy was able to produce from the market crash in about the 24th of February. Started out with $63,080 roughly. I added $45,925. And then these are all the trades. Most of these are vertical spreads on weekly options. We do some long-term trading too. Here's Nike and Intel, but most of them have been on weekly options. The ending balance right here is $146,436.71. I minus out the cash that I added, $45,925.90. And the beginning balance was $63,080.47. So that is $37,430.34 in trading profits. That was February 24th to April 10th. That's a short period of time. I made 59.34% on my entire account balance, and every trade I've made is on these broker statements. If you just count the margin required to take each one of these trades, I made 106.94%, almost 107%. We have directional trades, just buying calls and puts, banking on a direction of the market, either up or down. 82% of those during this period of time were profitable, and profitable vertical spread trades were 96.77. This is pretty much where it is. It ranges from 96 to 98% successful, profitable trades in any given month. So this is pretty typical. We did a lot of trading here because I just wanted to trade everything. We knew this market was going down, and it wasn't coming back anytime soon. And I'm talking about weeks here, not months or years. Here's when the market stopped, and here's my technical indicators. You've seen all these before probably, but I put them together in a unique way that tells me when the market is about to change short term, when the odds are in my favor that the market is about to change. I got a sell signal right there. I have two primary and a secondary buy or sell signals. I got my two sell signals right there. I also use the 21-day moving average and the Bollinger Bands. I look at candlesticks, but this tells me we were going down, and this confirmed it. And I started trading like crazy until right about here when it said the market is about to change. Now, why would you expect the market to change? It's like a freight train to the downside. Why would you expect the market to change? Well, because my indicator said that it was going to, and it confirmed it right up here. And I began to go long. We did vertical spreads. We did some directional trades, but mostly bull puts. Here we were doing bear calls. And the 10th, where it ended here, is where that broker statements show you what I did. And there's every one of my trades. You can peruse those at your leisure. And here's my actual trading results year to date for 2020 as of 7/31. Profit on weekly spread trades. I've made 97.82% on my entire investment account. I've almost doubled my account on weekly spread trades alone by July 31st. That's 7 months. The percent profitable weekly spread trades as of July 31st was 98.31% profitable. So I had about a little over 1.5% losses on my trades. Profit on the standard option trades was 15.81%. You can see I make a lot more money on weekly spreads, and I like them. A lot of times I tell my clients, it's kind of a boring week. We expected to happen. Sometimes we have to do things and make changes, but a lot of times it's just kind of routine and boring. And if we do the same results we've achieved as of July 31st, we're on track for 198% profit, almost 200%. My strategy is based on, to make this steady, reliable income every week. We're in on Monday or Tuesday, out on Friday. It's much easier to predict where the market won't go than where it will go. When the market is trading, there's three things that can happen. One, it'll go up. Two, it'll go down. Three, it'll meander sideways. There's a fourth thing that a market can do when you trade weekly options. It can go way up or way down, and that can sometimes move against you. But out of the four things that a stock can do, three of them we will make money on, and we cut our losses short if there's that occasional rare loss. We only trade for 1 week. You can make whatever income you want. You just have to pick the number of stock options you want to trade. Now, it'll depend on the size of your account, but you can go in there with a smaller account and you can steadily make these profits. Leave it in there until you build up your account balance. If you understand compound interest or compounding your returns, your account balance will grow very quickly if you're achieving these kinds of results. And it doesn't make it makes money no matter if the market is going up, down, or meandering sideways. Now, if it makes a huge move one way or the other, and we're on the wrong side of that, we have to get out, but we do it quickly, or we can leg out of our trade. That's a defensive strategy that makes a ton of money if we know how to do that. When the market crashes, you make the biggest paychecks. Again, 59% in about 2 months and a week. That's excellent return. Okay, how this strategy works, the key, and this is absolutely the key, and I'll show you a chart here that illustrates this in a minute, is selling an option at a particular strike price that is well away from where the stock is currently trading. And it's very unlikely the strike price that we choose will be hit by the share price during the week the option is in existence. Remember, we're only predicting the market for a week. And it can do 3 things. It can do 3 out of 4 things and we'll make our money. The 1 out of 4, we'll have to make an adjustment. For example, if first of all, you'll sell a put option, and when you sell an option, you earn the premium. Whenever you make a trade, and some of you may know this, some of you may not, but whenever you make an option trade, there's another trader that takes the opposite side of that. So if I sell a put option, there's another trader that buys that from me. And whenever I buy a put option, if I buy a directional trade put option, there's another trader that says, I think the market's going down. There's another trader out there that says, no, I think it's going up. So he sells me that option. But what we do here is I sell a put option, let's say with a strike price of $350, and expiring on the upcoming Friday. This is Monday or Tuesday. I'm placing that trade. I earn the premium. Step 2, I purchase a put option with a strike price of $345, expiring on Friday, and then I pay a premium for that. I earn a higher premium when I sell the $350 strike price than when I buy the $300. I'm sorry, this is a mistake. It's $345. When I buy the $345 strike price, the difference is a credit or a profit. This reduces my risk to $5 per share, and I'll explain that in a little bit more detail in just a minute. The difference between my 2 strike prices, sorry about the typo there, but this is $350 I sell and $345 I buy. I'm only risking $5 a share, and that's called the spread. June 19th, I sold a $327.50 strike price on Apple with an expiration on June 26th. This was Monday, if I remember right. Could have been Tuesday. I immediately earned the premium. I simultaneously bought a $325 strike price. It's a spread of $2.50 with the same expiration date, 6/26. I paid a lower premium than I earned for selling the higher strike price. I earn a higher premium on the option I sold than the option I bought. The difference is my credit or profit. Here's Apple. Here's the day of the trade. We get a buy signal. By the way, when I get my buy signals, I get an 85%. There's an 85% chance that the market will not exceed the most recent low, which is right there, in the next, say, 2 weeks. So you begin with an 85% chance of success. Now the market moved up. Everything's going great. The market would have had to come down here. Here's $327.50. I sold the strike price, bought a lower strike price, and I earned the credit. I personally trade 20 or more options, so I trade a lot of these. And the market went up. So hey, if I had a call, I would have been making money. I would have given it most of it back this day, and this was not doing anything. And if I would have had a call option, I would have lost money. But with my weekly spread, a bull put spread, I think the market's going up. I kept my profit. I was in the market for 5 days, Monday through Friday. Here's another one, XLNX. I bought a bull put, and here was my strike price, right around $90 a share. I sold a $90 put, and I earned the premium. And whoa, what happened there? But as long as that price doesn't go below the $90 that I sold, I'm going to make my money. Now, make a note of this, that when the candlesticks are below the 21-day moving average, the 21-day tends to act as resistance. You see it right there. When the candlesticks move above the 21-day, it tends to act as support. Same 21-day average acts as resistance here and support here. Here it formed ragged support, then it picked up good support there. Here it was a little bit of resistance, and here the day of the trade it broke through, and so this tells me this is not going to act as resistance. I'm sorry, this is going to start acting as resistance down here after I bought this call. Now here you see it come down, hit the 21-day, acted as support. It overcame the resistance here, acted as support, and my strike price was clear down here, so I made the money. If I would have bought a call, I would have lost money, pretty good amount of money. But I just was only in there for 3 days. Did this on Tuesday, and I think this was might have been the July 4th weekend, so it was a very short week. Nice little trade, easy to predict the market, much easier to predict where the market's not going. Here I'm predicting it's not going to go below the most recent low, and I was right. I'm right, 98+% of the time. Why do we trade two options with a different strike price? Now, we could just sell a put or sell a call, but we want to limit our risk. We don't want to be out there with unlimited risk. For example, on Apple, if I would have just sold a put, or let's look at XLNX, if I would have just sold a put, I would make more money because I didn't have to spend any money on a premium to buy the next lower strike price put, but I have unlimited risk. So XLNX, they go bankrupt after the market closes. The share price is down here at $75 a share. When I sold the $90 strike price, I'm obligated to buy those from that other trader because the other trader bought the put, so he has the right to sell those shares at $90 a share, and I'm the one that picked up that risk. That's why I earned a premium. So if I buy the next lower premium put, then I have the right to sell those shares at that strike price. So I have to buy the shares at $90, and I have the right to sell them at, say, $87.50. So in this case, I'm only risking $2.50 a share. The market can crash like crazy. That's the most I can lose is $2.50 a share times 100 share. Again, as I've already explained, when we sell a 200 strike price put, we're obligated to buy 100 shares at $200 a share. If the other trader wants to exercise it, the other trader will want to exercise if the share price goes below $200 a share. By buying the 195, and this is another example here, I have a $5 spread. We have the right to sell those 100 shares, so we have to buy them at 200. We can sell them at 195. The most we can lose on this trade is $5 per share. I never have a larger than a $5 spread. $2.50, $3, $5, that's where I keep my spread to minimize my risk. And obviously this limits our risk. We have to buy at 200, but we can sell at 195. No matter what happens, our risk is limited. My signal days indicate when the probability of the short-term profits is high. Casinos make money just hand over fist, and it's not up, down one month and up the next. It's just very, very steady because they always trade with the option, with the probabilities in their favor. And I've already explained my signal days alone give you an 85% chance of success. And when we're using the signal days that my system generates, we are the casino. Shoot me an email with credit spreads typed in the subject line, and I'll send you my spread strategy. It's a very detailed explanation of exactly what I do. It has lots of examples. How to do bull puts when the market is going up, how to do bear calls when the market is going down. Just send me that to David Miles at Academy of Trading or academyofti.org. Now, I offer a coaching program, and the price is not going to be here for long. I know a lot of people say that because they want you to, buy today, but we're not. With the results I'm getting, I've been getting for years. It's the price won't stay here much longer. But here's what I'm offering today and in the near future. We have 1 hour weekly live coaching sessions, or you can opt for 16 1/2 hour sessions. Most of my clients like the 16 1/2 hour because they're learning a lot of new information. Then we practice on the paper trade account. I'll show you how to set that up, and you will learn all the aspects of my trading strategy. In addition to this, our coaching sessions, live coaching sessions, we have 6 months of live conference calls on Monday and Tuesday. Before the market opens, we look with my clients. I share my screen. We're talking in person. We look at the market before it opens to find promising trades using my system, and then I actually take trades after the market opens with my clients looking over my shoulder. They can take the same trade if they want. It's up to them. They know my results, and of course a lot of them do that. But I also send trading texts throughout the week. Whenever I do a trade throughout the week, outside of our Monday and Tuesday conference calls, that's about 45 minutes each day. But each time I buy a call or a put, do a weekly spread strategy, a vertical spread, I'll text that out, and you know exactly what I did and when I did it. So you can follow exactly what I do the moment I do it throughout the week. You're never on your own trying to figure out, well, what did I learn in my coaching session? I think I should take this trade. Well, in the beginning, if you just follow my trades, and I don't give trading advice, by the way, but if you just follow my trades, and these are real live trades that I make, you should mirror my results. So this strategy that I'll teach you, combined with the conference calls and text messages, my clients like those even better than the coaching sessions. You'll have a powerful money-making combination that can really make a difference in your financial future. I mean, it can make a big difference. If somebody came to me and says, and I start talking about the results, my results, start telling me, well, I've done all this, and I do 98% successful trades, and I've made 59% in a year, and I've doubled my money by July. 59% in about a little over 2 months. I've made 97% by July 31st. I said, that sounds awesome. I'd like to see your broker statements. And I'm willing to share my broker statements above. We've looked at those. But if somebody's not willing to share their broker statements, well, why not? So it can give you a powerful leg up. You are the casino, and you can be one of the 4% that makes money on the options market, stock options market, week in, week out, year in, year out. The total investment for this is $24.50, and by the way, that's way too cheap. And I'm not going to keep the price at this point much longer. But for a limited time, we're a relatively new company. We've come from Robert Kiyosaki's coaching, and we've been doing this on our own for some time. So we're going to offer this with a 50% discount. So your cost is $12.50 total. And that's, again, it's too cheap. But it's a great deal, and I would recommend that you take advantage of it. To make it better, you can bring a family member or a friend at no additional cost and share the fee. So that brings you down to about $6.25. And you can take action today or in the near future by going to academyofti.org, clicking on the Take Action button, which is right in front of you, and then clicking Take Action under Options Trading School, which is the one I teach. Warren Buffett said, "Look at the market fluctuations as your friend rather than your enemy." So if 4 things can happen to a stock and 3 of those things will make you a profit, those are great odds. If you keep doing what you're doing or trading like you're trading, you will get the same results. I think it was Einstein that said doing the same thing over and over again and expecting different results. He called that the definition of insanity. So it's a great price. Our strategy is to help make small traders excellent traders, put them into the 4%. So it's a very, very small fee, and it can really make the difference in your life. Send me an email with any questions you have, or we can set up a time to talk. This is my email. If you'd like to talk person to person, I won't. We can discuss coaching. I won't high pressure you to get in. It's either for you or it's not. By the way, I'm retired. I'm not looking for 100 clients. I'm looking for about 10 more. And we'll get those pretty quickly. But if you want to discuss it, you can send me an email with your questions or say, "I'd like to talk about this. Please give me a call." And I'll be happy to do that. Here's our website, academyofti.org. A lot of good information there, a lot of articles, videos, a lot of information about all the coaches, our bios. So you can check that out. You're welcome to do that. And I wish you the best in your trading, whatever you do. I'd love to have you join us at the top, where you can make really excellent money. Eventually quit your job. I quit mine a long time ago. And make your dreams come true. Money won't make you happy, but lack of money will sure give you a lot of stress. So keep that in mind, and I wish you, like I said, I wish you the very best in your trading, and hopefully we will hear from you soon. You guys have a good day.